Bitcoin got hit with some crazy volatility today and is right now at a make or break point. And in my opinion, we all need to be cautious at this level, whether you find yourself bullish or bearish. I understand it feels great to see Bitcoin pump aggressively, but does this move actually change structure at all? Are we actually about to smash all-time highs, or is this another classic bearish continuation ready to crush some dreams? So to be honest, guys, I don't know. As a trader, it's more important to be able to react when certain things happen. I'm just showing what I'm currently looking at, and currently, to me, absolutely nothing has changed yet. But that being said, guys, we are really freaking close, which is why I think no matter which way a person is leaning at this time, they need to proceed with caution. Just to look at what happened, I know everybody was going absolutely nuts as we just exploded to the upside earlier. Notice the sell-off was actually slightly even more aggressive, basically the exact opposite move, but it actually ended up going a little bit lower, even breaking this structure a little bit. Guys, I've been warning about this level, this 67.6 approximately. I've been warning about this since we bottomed out in August around 49K. And to be honest, we are seeing more strength than I would have expected. If we end up breaking this high here, at about basically if we get some closes above 68K even on the lower time frames, I'm actually going to be, I think, a little bit cautiously bullish even at that point. I'll be more open to the idea of all-time highs being around the corner, because that will be the first time that a swing has actually, that this is any different from any of the other swings we've seen in the last 7 months. So this is basically my fib pocket here, these green lines. This is the macro 786 I was watching for. This is the macro 886. I actually ended up taking a short off of this level here. This was a post that I made earlier this morning, basically right as we hit that 886. Notice I waited to see how we reacted to that level, and the fact that we got above the 886, retraced below it, and that's just on the 1 minute chart. I ended up taking a short, and I ended up taking some profits down around 65.6, 65.5K. Nailed that trade, ended up getting stopped out in a little bit of a profit on the rest of it. But I'm still looking at shorting this. I actually just before starting this video, I started another hedge short. If it ends up getting stopped out, we break above 68K, that's absolutely fine. I've been in a long myself. Even though I've been openly bearish as hell the last few months at this point, I am still willing to look past my bias and trade. I've been in a long since we bottomed out around, what was that, 59K down here, and that was actually a hedge long at that point. But anyways, I'm still in a part of that position. I've obviously paid myself along the way, but I do have some running just in case this does break out. The thing is, I was warning about the fact that as we approach this Fibonacci pocket here, down from basically 65.5 up to 67.7, somewhere in there, I had mentioned that, we're going to see FOMO go crazy. You're going to see crazy bullish posts as we approach that level. And as we hit that 886 today, I was honestly seeing thumbnails calling for $1 million Bitcoin as soon as that happened, right as we're hitting my macro resistance. Yes, absolutely, this can change at any point. We could break through it in the next few minutes. Like, really, the bulls are showing some strength. As bearish as I've been in the past, I have to give credit where credit is due, and we are seeing some strength. The problem is, every time we've been at these levels in the past, since the end of, well, basically middle of March is where this downtrend started, we have had this exact same rally up to the same structure we're at right now. We've already done this 3 times. This rally that we have right now is literally no different, you guys. There is not one thing different here. All that we end up doing, we set a macro lower low, the Fibonacci, pull back to the Stuber fib here. That's what all these red boxes here are, all 786, 886 Fibonaccis, the Stuber fibs. And each time we get up to that level, you see crazy FOMO, and then you see the market end up getting rejected and set a lower low. This is now round number 4 that we see if, the trend continues. Trends always end up breaking in the end, but it hasn't broken yet. That's why I haven't really changed my opinion yet. Yes, I was willing to play longs in this area, but since down here, I was willing to play longs, but I said, that's a bearish structure break. But ever since bottoming out around 49K in August there, this is the target that I was calling for. When we got this bounce down here, I was saying, watch out for this macro Stuber fib. We're going to see crazy bullish posts coming out right as we get to it. We are seeing that again. Yes, this time could absolutely be different. I am totally open to that idea, and that's why I still have a bit of my long open from down here. Because I see the possibility that, hey, yeah, there's strength here, but the thing is, guys, resistance looked... It looked like the bulls were strong every time they came up to this structure on these other swings, right? As we ended up getting this little W here, this looked strong. It always looks strong as you're going into resistance. Here, yeah, set a lower low, climb up to that 786, 886. Yeah, the bulls looked very strong, rejected. Lower low, pull back up to that 786, 886. Bulls look very strong. There's Trump speeches, etc. And nuke to the downside, lower low. Come back up, 786, 886 fib pocket. We got Trump now launching a coin tomorrow or something like that. I'm not a fundamental guy. I'm not a news guy. I'm just looking at structure for what it is. I personally, guys, I know everyone thinks I'm a perma bear. I think the bears are running out of time. I myself think that they need to get rejected very soon here. Otherwise, they're going to miss their chance, because if we break out of this, if we break that 68K, I think at that point, it looks pretty good. And if we break 70K, that's where I think it looks really good, because at this point, as far as these ranges go that I've mapped out here, these macro ranges, this range has not changed. I mean, this is why I say that I don't consider this a higher high compared to this high, right? Because at the end of the day, we are in this range from 70K down to 49K. We have not broke above 70K, and we have not broke below 49K since. So that is the range that we're still in. This is the resistance fib pocket that I was waiting for. So yeah, absolutely. Even though I'm willing to play the long side, and I see strength here. The thing is, like, I'm personally okay to hedge a short at this level because, yes, I have a long position going. And at this point, this is just a level that I would typically sell. I played this setup every time, right? This is just a Stuber fib setup. I show it on the 5 minute and the 1 minute, basically every video I ever do. 4 hours, no different. So yes, it doesn't always work out, and this trend will eventually break. But so far, we still have the same. I mean, even if I'm wrong here and we blast off to the upside, Kate, whatever, my long takes the reins, that's totally fine. But how silly would you feel if this ends up playing out the exact same and we had the fourth exact bearish short setup in a row? Like, exactly. We set a lower low, pull back to that fib pocket, get to the 886. I mean, this is the exact same thing we saw 3 times already since March, basically. Every time we've got there so far, that's been a hard rejection. So we're going to have to see, right? Like I said, there is some strength there, but we're at resistance, and resistance is resistance until it's broken. So yeah, I mean, it does look like we're climbing to the upside nicely. But something else to consider is, like I said, we did break this structure to the downside here after setting this high. So technically we also have a range something like this on the lower time frames. And notice that right now, we would technically be right inside that Stuber fib. I personally think, the fact that we're not getting rejected right away here, and we're actually testing it a few times, again, I think that's a sign of strength. But at the end of the day, until we break this high here, just because that would actually, after breaking this 886 once, I really don't want to see us break it again from a bearish perspective. So that's just kind of where I'm thinking, if it does break that level, then I got to give a little credit to the bulls, and I want to play it a little more cautiously, and I'll probably only look for shorts at that point if the MDX algo indicators have lower trending sell signals or divergences, a lower time frame, loss of a higher low again, something like that, right? But as it stands, I just think that everyone should be cautious at this level. I know emotions are running high right now. I see it all over social media. And maybe the Moon Boys are correct this time, right? Maybe they are, but the last 3 times we've seen this, and the sentiment was the same every time on Twitter and just social media in general. We saw people arguing that, yeah, we're going to all-time highs any day. Yeah, we're going to all-time highs any day. Yeah, going to all-time highs any day. Yeah, going to all-time highs any day. Maybe this time is different, but that trend hasn't broken yet. So I don't want to sound too bearish because everything I just went over. And also, guys, even when I have been bearish in the last few months, I want to be very clear. I still hold most of my spot holdings. I really just changed the direction of the market I'm trading. It's been a great hedge to be shorting on the downswings. While the portfolio's taking an ass whooping, then at least making some money on the trading account, right? So understanding that I'm looking at this from a trader's perspective, not so much an investment perspective. So I am just looking at the charts for the structure that is there currently. I'm not looking at, the structure might change tomorrow. Yeah, it might. And at that point, then, if we start breaking these levels and it starts looking more and more bullish to me, and it just looks like there's some more strength compared to the other swings, then at that point I can wait for a pullback and I can start getting into some heavier long positions, or just trading the long side more aggressively. Because like I said, I am in a long, but I'm still a little hesitant on the long positions, and I'm just more aggressive on pulling the trigger on the short side for the last few months. But I'm open to changing that idea, or to changing that strategy. That's totally fine. As traders, we need to adapt. But to just guess that, hey, structure is going to change this time because it looks strong. Well, it looked strong every other time it approached this resistance as well. So I know it's maybe not the type of excited video you're hoping for. I just like to really keep emotions keeping level-headed as we approach these levels. And that's one reason why I love in my streams, when I always talk about these, I always talk about these levels and I repeat them over and over. It's so that at these levels I can keep a level head. If we break out, I don't care. The market's not going anywhere. I can still trade it. I don't care if I miss a single move, if it means playing it safe and not FOMOing into the same resistance 4 times in a row. Because judging from Twitter, every time we got to these 786, 886s, everybody was FOMOing leverage into resistance and getting wrecked every single time. So if it changes this time, great. Did it way out, as long as you're not doing it every time, trading into resistance every time and getting wrecked every time, then great, right? So anyways, I just really wanted to do this quick market update because I see a lot of crazy emotions going, and I just think it's important to understand what the charts actually look like. Yes, it looks like there's strength. I will continue to say that. It looks like there's strength. Just understand that we are at a resistance level. So no matter how you look at it, it's time to just proceed with caution, you guys. So anyways, legends, I think that is about all I wanted to go over today. Hopefully you found this video useful. If so, be sure to hit that like button and subscribe. And if you're interested in my absolute favorite indicators, actually one thing I wanted to touch on with this, you guys, sorry, I can't believe I almost forgot. With the 4-hour chart, check out this indicator with the liquidations. Notice this pump up to the 886. I know I show this in a lot of my videos. We grabbed every little bit of high leverage liquidations on this pump to the upside, and now we only have a whole bunch appearing below us here. Just another little bit of a warning there that the market maker loves to push the price into those liquidation levels to grab that liquidity. Does it have to happen again? No. Did it happen all of these swings? Yes. I showed that in previous streams and stuff like that. So again, the trend can change, but so far it is what it is. So if you are interested in some of my absolute favorite indicators on TradingView, there's an additional 10% discount on checkout using the link down below, which also gives you access to the MDX Algo VIP Discord group, where I myself and many other coaches and just very talented traders are in there helping each other out. And I'm personally doing most of my trading on Blofin. No KYC exchange. There should be a link down below for that as well, for those of you who need a new non-KYC exchange or just want to back up in general. With that, I'm out. Stay safe, my friends. Be careful out there. Peace.